Rates are still going up, reduced inventory, and we talk about the effect on your purchasing power. This is the weekly report on Major Money Matters. Welcome to Major Money Matters. My name is Major and I am the host of Major Money Matters. While you're here, go ahead and hit the like and subscribe button because we post videos every single week to keep you up to date on economic news and its effect on the housing market. So I am a mortgage broker powered by Edge Home Finance, and let's get right into this week's report. So first we throw up the charts, and as we look at this, rates are still going up, and later this week, I am going to release a video, and it's going to talk about the real reason that rates are increasing. Not later this week, next week, I'm going to release that video, the real reason why rates are increasing, and have a conversation and explanation about what's going on economically and why we're seeing this drastic increase in rates at a very, very high pace. So we look at the charts here. This is mortgage-backed securities, okay? If this is your first time here, as this line trends up, interest rates go down. As this line trends down, interest rates go up. This is a chart put together by Barry Habib. Shout out to Barry Habib at MBS Highway. And you can see recently, since about the beginning of March, you see a solid trending down line from March through today. And people always ask, is it better than this week? Is it worse than this week? Well, basically by looking at this chart, I circled two things. The first circle there is where rates were where mortgage-backed securities were selling when we released this last week. The second circle is technically where we are today. So it is getting worse and worse, the sell-off of mortgage-backed securities, and then interest rates are going up. So let's talk briefly about why, and I will give you a tip. It is not because the Fed increased the Fed funds rate. It's really because they didn't do enough to increase the Fed funds rate. Inflation is running rampant, and you see this all around us, but that's the reason you see this sharp increase in interest rates. So the fact that the Fed is going to increase 7 times, the projection from the Federal Reserve, they're going to increase interest rates 7 times this year. That is not indicative of interest rates being higher. That is the suggestion. The Fed is making the admission that they need to do better with taking care of inflation. That's why the Fed raises the Fed funds rate. More on that coming next week in that video. But Jerome Powell, when he was talking, and you see that, look at that solid, you see the solid red line between, there's a red line between the two circles there. And that's when Jerome Powell, the head of the Federal Reserve, was actually talking this week. And he mentioned the selling off or reducing the balance sheet. And when he says those words, investors get nervous because that means that the Federal Reserve is going to basically offload their balance sheet with these bonds that they're holding. And that is what investors get scared of into those mortgage bonds flooding the market. And that is why interest rates increase, because just think of it like this. If you know that there was a bunch of, if you were in the market for a Honda Accord, and you know that there's 9 trillion Honda Accords coming on the market next month, you are probably not going to buy a Honda Accord right now. You're going to wait till there's a surplus of them, and you're going to buy then. Also, if you are holding a Honda Accord and you want to sell that Honda Accord, you're probably going to go ahead and sell it now, because you're saying, hey, there's a surplus coming and there's not really going to be a market for my Honda Accord. That's exactly what you're seeing happen in mortgage-backed securities. There's a big sell-off right now, and as mortgage-backed securities get sold off at a lower price, interest rates go up. So are these interest rates high? Right now, the average interest rate's about 4.5 across all loan programs. That's usually, actually, that's not even across all loan programs. That's like Those are conventional loan rates, and that data is usually kept by the St. Louis Bank. Average interest rate nationally about 4.5%. VA rates, of course, are a little bit lower than that, and VA rates are lower because they're backed by the federal government. So you're in the low fours on VA. Jumbo rates on VA, you're technically in the when you're working with me, you're a little bit lower because my jumbo VA rates are a little bit lower than my standard VA rates. So historical data on mortgage rates. Are these rates high? You can look at that chart there and say, not really. Now, I am a bit concerned about the steep upturn in these rates. You can see the all-time highs are at 18% in October of the early 80s. And then, of course, during COVID, we had the all-time lows in interest rates. Now, the story of the market continues to be increasing interest rate and reduced inventory. The CEO of KB Homes came out this week, and in the new homes report, he made an interesting statement. He said, "Our biggest challenge is completing homes, not selling them." And this is the CEO of KB Homes. So what he's basically alluding to is the fact that these companies are having supply chain issues. They're having problems just keeping up with the demand for new homes because there's a very big demand for homes. And there's not a lot of supply. New homes came out today and they said, hey, there's 400,000 new homes available. And what they didn't put in the report is that only 9% of them are actually completed right now. So it's not the 400. The other 91% are still in the process of being built. I alluded to this last week when I brought up the chart that talked about housing starts and housing completions. You can go back and look at the video from last week and see some more information like that. It's on the weekly report posted here on the channel. So I also wanted to talk about this. Now, what's the real impact? If you're shopping for a home right now, you're seeing interest rates go up, up, and up. How does that really impact you? Well, let's say when you started shopping for homes, your interest rates were at like 3.75 or something like that. And let's say you're in the middle of this chart here and your payment on principal and interest 3.75, you were at a $500,000 purchase, and your principal and interest payment was $2,316. All right. Now your monthly payment may be at your interest rate, may be at 4.5%. And that's an increase of don't like doing public math here, $218 that your monthly payment has actually gone up. Now, honestly, for the average person, this is not enough to take them out of the housing market. And if you're thinking, well, higher interest rates, I can't afford the payment, I encourage you to look at the appreciation rate and the fact that the low inventory is still going to be there. You should look at the fact that what you're making per month on your family balance sheet, as I call it, your wealth is growing, although you're paying out $200 and some odd more per month. I do continue to reiterate that economists are projecting that we will see a recession potentially as early as the end of this year, or as late as the middle of 2023. So interest rates go down during a recession. Housing prices do not necessarily go down in a recession. Sorry, there's only been one time in the last 10 recessions of our nation that housing prices has actually gone down in a recession. So what should you be doing? Getting into a property, and then continue to watch that appreciation go. Because of the low demand, anytime you have a low demand, prices are going to go up. Will interest rates affect some people getting into the market? Yes, but overwhelmingly, there are people like myself who say, doesn't matter what the interest rate is, I'm not paying rent and building someone else's wealth. I'm going to buy a house myself and get into a property. So there will still be a demand for homes, even if interest rates keep going up, in my opinion. Now, it might get to a point where interest rates go up and they have an impact on some people in the market, but there's still going to be people who said, I don't care what the interest rates are. I'm going to continue to buy a house. The other thing is there are those people out there who are buying their second and third homes who are not fazed by the interest rate because they know the long-term investment of of real estate, and they are staunch in their belief that they're going to own versus go rent from someone else. And they know the cycle. Interest rates go up, interest rates go down. When interest rates go down, you refinance, drop your monthly payment at that point. The question is, can you handle the monthly payment right now? And most people, the answer to that question is emphatically yes. All right, that's it. That's the weekly report. See you guys next time on Major Money Matters.